If you want to build real long-term wealth in 2025, without timing the market, picking stocks, or spending hours analyzing companies, then this video is for you. Today, I'm breaking down the only 3 ETFs you actually need to build a simple, diversified portfolio that performs exceptionally well over time. No hype, no speculation, just data, simplicity, and long-term returns. Welcome to ETF Shark. Before we jump in, here's the idea behind this portfolio. You don't need 20 ETFs. You don't need complicated allocations. You need broad diversification, low fees, and consistent investing. These 3 ETFs will cover the entire U.S. stock market, the strongest dividend-paying companies. The rest of the global economy with only 3 funds, you get thousands of companies across every sector in almost every major economy, and historically strong returns. Let's get into ETF number 1. The first ETF you need to build long-term wealth in 2025 is VTI, the Vanguard Total Stock Market ETF. What it gives you, over 4,000 U.S. companies exposure to large, mid, and small-cap stocks. Extremely low fee, 0.03% expense ratio. This ETF alone is more diversified than most people's entire portfolios. Why it belongs in your core portfolio. For the last century, the U.S. stock market has been one of the most consistent wealth-building machines on the planet. Buying VTI essentially means, I want to own the entire American economy. You're automatically invested in Apple, Microsoft, Nvidia, Amazon, Tesla, and thousands more. If you could only buy one ETF for long-term growth, VTI would be the strongest contender. ETF number 2 is SCHD, the Schwab U.S. Dividend Equity ETF. This is one of the most loved dividend ETFs for a reason. What makes SCHD special? Focuses on high-quality, financially strong companies. Looks for consistent dividend history. Screens for solid cash flow and strong balance sheets. Expense ratio, 0.06%. Why SCHD belongs in your 2025 wealth building plan. SCHD gives your portfolio stability. Dividend-paying companies tend to be profitable, mature, less volatile, more predictable during downturns. This ETF currently yields around 3 to 4%, meaning it pays you cash while you wait for long-term growth. Think of VTI as your engine and SCHD as your stabilizer. Together, they create a powerful mix of growth plus income. ETF number 3 is VXS, the Vanguard Total International Stock ETF. Most U.S. investors have zero international exposure, and historically, that's a mistake. VXS gives you ownership of more than 7,000 companies outside the United States, including Europe, Japan, Canada, Australia, emerging markets, and more. Why VXS matters in 2025. No single country leads forever. Some decades, international stocks outperform the U.S. Adding VXS gives you exposure to growing global economies, strong emerging markets, diversified long-term opportunities. It reduces home bias and rounds out your portfolio, so you're not betting everything on one country. All right, so how do you actually combine these 3 ETFs? Here are 3 portfolio templates you can adapt based on your goals. 1. Simple growth portfolio. 70% VTI, 20% SCHD, 10% VXUS. 2. Dividend-focused portfolio. 50% VTI, 40%. SCHD, 10%. VXUS. 3. Global diversified portfolio, 60%. VTI, 20%. SCHD, 20% VXUS. Pick the one that matches your style and stick with it consistently. Here's the crazy part. If you invested just $500 per month into a simple 3 ETF portfolio like this and earned long-term market returns, you'd end up with somewhere between $750,000 and $1.2 million over 30 years. That's the power of compounding, and it's why simple investing works. So those are the only 3 ETFs you need to build long-term wealth in 2025. Keep it simple, stay consistent, and let time do the heavy lifting. If you want a breakdown of the perfect ETF portfolio for beginners, make sure to hit subscribe. This is ETF Shark, and I'll see you in the next video.